Good morning, Bitcoin. Today is Tuesday, January 9th, 2018. My name is Thomas Hunt, and here's what's happening today in Bitcoin. The price of Bitcoin was down 0.4% in the last 24 hours, with a last of 14,972, a high of 15,373, and a low of 14,239. That's $1 for 6,693 Satoshis. Jamie Dimon says he regrets calling Bitcoin a fraud and believes in the technology behind it. Usually you have to wait years for this kind of reversal. But remember, we're using crypto time, so it only took weeks. JP Morgan Chase CEO has completely changed his position. Just a few weeks ago, Bitcoin was a fraud, but now he regrets calling Bitcoin a fraud. What will come next? Will JP Diamond and JP Morgan accept Bitcoin next? Will they trade in it? Will he allow his traders to trade in it? Remember, he famously said, "None of my traders will trade in that Bitcoin." Jamie Dimon, complete 360 or 180. He's turned around. The next step to improve Bitcoin's flexibility, scalability, and privacy is called MAST. It used to be called Treechains. Now it's called MAST, which stands for Merkleized Abstract Syntax Trees. It's an impressive way of saying that if you put all of the hashes or secrets in a tree, you could see if a certain hash was in that tree, but you couldn't see all of the hashes in that tree unless you already knew them. It gets pretty complicated from there on, but Peter Todd's involved, as well as the rest of the crew, and it sounds really fascinating. Merkle trees using MAST, like I said, can allow you to put the root in the tree. Then you tell someone that data package 123 is somewhere inside the tree. And using this key, they can find the needle in the haystack. It's pretty impressive. This would allow you to, instead of just locking Bitcoins up with a single script, you could lock Bitcoins up in different ways. Say, pay Alice this on the first day, pay Bob this after 50 days, pay Jan this after 100 days. You can have different kinds of ways that they get the key. You could give them part of the key early on, all of the key later. It's a really impressive, imagine a whole cloud full of hashes and a whole cloud full of different ways to spend Bitcoin, all tied up in one neat package called a Merkle tree. Very interesting stuff. Petition to bring Segwit to Coinbase nears 5,000 signatures. That's right. You can sign up today at change.org, description in the link below, and you can sign up to ask Coinbase to accept Segwit. Signing up right here, and boom, they want some money. I'll share instead, and done. That's it. That's all you have to do. Sign right there at change.org. We've also got some great news from TorGuard. TorGuard now accepts mainnet Lightning payments for their service. So you can buy TorGuard with Lightning, the way of the future. Keenan Rodriguez from Blockchain is speaking out against BIP 176. The idea that we could change the units from Bitcoin to bits, moving the decimal places down. He says, if decimals confuse you, you shouldn't be using Bitcoin in the first place. The unit bias argument is complete nonsense. Stop trying to make Bitcoin into some family-friendly party trick. I totally agree. Bitcoin mining wastes energy? What if that's a good thing? Finally, somebody represents the other side of this ridiculous FUD argument, and it's none other than Michael J. Casey, formerly of the Wall Street Journal, co-author of the book Age of Cryptocurrency. And Mr. Casey argues, just as I've been arguing for months and months, too many people assume that technology remains static, perhaps without thinking. That's right. If you don't think about Bitcoin and you say, gosh, we're using so much electricity and we're going to use so much more next year and so much more 10 years from now. And if nothing changes, that's where your argument goes wrong. Nothing has ever not changed. The one thing we can learn from human history, everything changes. especially technology. If it's good to mine Bitcoins, it's better to mine Bitcoins for less electricity. So if you can make a new chip that does it, if you can make a new factory and a new plant that makes your new chip, you're going to put the old chips out of business. It's Moore's law on steroids because of the economic incentives. Moore's law incentivized us to build processors for servers and home computers and video games and all these kind of things. Bitcoin incentivizes us to build miners for an actual real billion and soon to be $1 trillion financial network. It's a larger incentive, a bigger means, and a bigger reason to build better chips. I believe humanity will rise to the challenge. Harvard professor predicts Bitcoin collapse due to government regulation. Ooh, seems really unlikely, especially given that government regulation has only led to more Bitcoin usage. If you look at the actual conditions on the ground, not a theoretical argument, once again, theoretical arguments are not worth the paper they're printed on, but the actual conditions on the ground show that in Japan, regulation brought more Bitcoin activity, not less, more. Bitcoin is teaching libertarians everything they don't know about economics. Twisty title. Another great article you should check out talks about how when a payment system isn't working, you have to understand the basics of economics. You have to understand what value does. And the argument of the column is basically that Bitcoin wants a return to money that fell out of the sky. Bitcoin doesn't want money to be a government and computer and human controlled thing. He wants money to be something that fell out of the sky that we just keep reevaluating the value of rather than just keep printing. He addresses the solution of the big blockers. There's a simple solution here. That's just keep increasing Bitcoin's memory or the block size. And as he properly identifies the counter argument, the people who run Bitcoin have ruled that out. Why? Because that would require a modicum of trust, and they want to abolish that entirely. Trust. Bitcoin, real Bitcoin, is trustless money. It goes through many servers, and it's difficult for the government or a corporation or whoever you would be not trusting to shut down all of those servers at the same time, or to have a grand enough conspiracy to stop your transaction from going through all those servers. The more that you increase the block size, the more you increase the requirements for the nodes that run those servers and process those transactions, and the easier it is for a government or large-scale evil corporation to stop your transactions. That's why the bigger block solution doesn't work. It fails to scale. If you want a Bitcoin that's not censorship resistant, you can use PayPal right now. Remember all the stories about PayPal froze my money. PayPal won't let me donate to WikiLeaks. That's your Bcash. That's your centralized, controlled network at work. Why would we build another one of those when we have Bitcoin? Below 15K, Bitcoin plays defense amid a bear move. And more great analysis from Omar Godboll over at CoinDesk. He says that the Bitcoin chart is a little bearish because we failed to finish above the $15,000 record yesterday, meaning that we might see some more dipping. The 50-day moving average is sloping upward in favor of the bulls, but he chastises the bulls for failing to capitalize on a favorable setup. This might have been the line that some said would rise us to $25,000 by the middle of this week. Obviously not happening. He is saying that there could be an inverse head and shoulders pattern. Remember, chart people look for these patterns in the charts and then say, because it happened in the past, it will happen in the future. Usually a pretty good argument. And he says that if we close today below 14,700, a flag and rising wedge support would mean that the rally, the low of 10,400, would have ended. Prices could then breach support at 12,500 and slide towards 10,000. Then again, if we have the bullish scenario, we would have a rebound from the 50-day moving average, followed by a close above $16,000, increasing the odds of an upside break of the rising wedge. Beautiful trading language there. And a quick check of CoinMarketCap. We've got Bitcoin up 1.5%, Ethereum up 11%, Ripple down 4%, Bcash up 5%, Cardano down 3%. And CoinMarketCap itself made a little bit of news lately. CoinMarketCap shocked the industry by removing the Korean exchange prices without warning. Some of you may have heard how some altcoins such as Bcash and Ripple were getting pumped through the moon on Korean exchanges. But once again, we have that typical problem of the new exchanges. They weren't charging any fees. And when you're not charging any fees on the exchange, we can't tell if that traffic's real or simply you selling to yourself over and over and over again. It's called wash trading. And if you're not charging fees, you can do it as much as you want. This is probably why CoinMarketCap removed their numbers, giving a more accurate showing of the value of these currencies. However, everyone hates accuracy and suddenly got all upset. They'd lost value. There's been a collapse. Really, they just showed you a more accurate way of the numbers. And finally, a message from James Altucher. All these penny cryptos could be the next Bitcoin. And these penny cryptos could be the next Bitcoin. And these penny cryptos could be the next Bitcoin. And if you're stupid enough to fall for that, I've got some beachfront land in Nevada to sell you. Beachfront property. Just wait 200, 300,000 years. No problem. You've got time. You've got mail. Thanks so much for watching Today in Bitcoin. We'll be back tomorrow with another short episode, keeping you updated on the Bitcoin news. Until next time, bye-bye.